Hello, I'm Steve Osborne with the Division of Local Government Finance in the Tennessee Comptroller of the Treasury. And this video will explain the use of our cash flow schedule. If you need any help with this calculator or any other item from our office, please contact the analyst assigned to your region. We are always happy to help. In this video, we will start with the research needed to find the data to help us forecast. We will see how Excel can help us forecast with a few simple formulas and how the forecast can be used. Please note that in this video, we are not forecasting budgetary revenues. That is done in our revenue estimating video. As we start building our base, we will work with one fund at a time. For this video, let's start with the general fund. For this, we will need to locate the following items: the bank statements for each month of the last fiscal year, a listing of all the non-operating items that was received into the general fund through its checking account. These may be grants, note proceeds, or other items like insurance settlements. The idea here is to identify all the items that hit the account that will not likely hit it again in the upcoming year. And we will need the budget estimates for the total operating revenues and expenditures for the upcoming budget year. These are as adopted by the governing body. Let's see what this research might look like. Here, we have a very simplified bank statement. The numbers we are looking for are here: total deposits, here, the total amount withdrawn from the account during the month. They could be checks written, ACHs, or wires. And here, the amount and timing of all non-operating items. Like here, we have the issuance of a capital outlay note where the proceeds were deposited in July for a fire truck that we purchased in August. After we have this for all 12 months, we can move to the data entry. This is the top half of our estimator tool. All the data you just collected will be entered into this sheet. Let's enter the numbers from our bank statements. Here, enter total July deposits as a positive number. Now, enter total July withdrawals in this cell. This last part is important. Enter the capital outlay note amount here in July for loan proceeds as a negative $100,000. Now the spreadsheet will calculate the total amount of operating receipts as $61,000 by removing the $100,000 note proceeds from the total deposits for the month. Now just enter all remaining months in the same way. After this is complete, enter the total amount of general fund operating revenue and operating expenditures from the budget document in the yellow highlighted cells here. Now that this section is complete, notice the percentages under the total operating cash receipts and cash disbursement lines. This is the percent of the total year for each month represents. For July, $61,000 of operating receipts is 6.25% of the total year. Now that the data is entered complete, let's look at the whole sheet. Notice the section at the bottom of the sheet. It is the forecasted monthly cash flows. Let's see how they are calculated. The spreadsheet calculates the estimated cash receipts for July, here, by multiplying the total revenue from the new budget, here, by the percentages, here, that the prior July is to the total of the prior year. That is to say that if last year the city received 6.25% of all of its operating revenues in July, then this year will be similar. But not always, and we will touch on this in a minute. Notice December and February, the months where property taxes are collected. These months contain a greater percent of revenue collected and that translates into these months having a greater amount of budget year projected revenue. Now notice the expenditures. They are calculated the same as revenues. Notice the April expenditures are the highest. This may be because a large insurance payment is due that month each year. and the spreadsheet forecasts April to have a high payment, commensurate with the prior year's average. When you are done with this page, click back to the prior tab called Cash Flow Forecast. The values from the prior tab have transferred to the Cash Flow Forecast tab, and all that is left is to add the new non-operating items. If you know that you will issue debt in July, here, enter the proceeds here, and the new debt service amount here. Finally, if you have a transfer out to, say, the Capital Projects Fund, enter that into the cash flow as well, here. Remember, on the last slide when I said that last year should be like this year, and most people will pay their taxes in February, we can expect that to continue. Well, what if you know that that insurance payment is moving from April to December? Let's then fix the forecast by removing the amount from April and adding it to December. Making this change is easy. Remember that this tab feeds from the prior tab, so that if you click on the April cash flow payment cell, you will see that this formula bar here. So beside K26, just type negative 21,000 and the amount of the payment, and then add that to December cash payments in the same way as a positive number. When you are done adding the non-revenue items to the cash flow, it's complete. And so is the new chart. At the bottom of the cash flow schedule is a chart that will automatically populate after your data is entered. This chart provides a picture of how your government's cash inflows and outflows look across the months of the fiscal year. You can print only the chart by clicking on the chart to highlight it and click Print. Notice that the chart has two sets of numbers. One on the left axis here, which shows the values of the cash inflows and outflows, and the values on the right side here are for the line chart. This line chart is important. It represents the amount of cash your government estimates to have in this fund at each point along the year. As you would suspect, it is the highest after the collection of property taxes in the winter, and then declines to its low point before taxes are collected again the next year. This chart is a perfect handout to the governing body because not only does it show the flow of cash throughout the year, it also shows a visible need to keep a healthy cash balance in a fund. Remember, start by getting all your research together. Enter your data from your bank statements. Enter total operating revenues and expenditures for the newly adopted budget year in the two yellow cells. The schedule will calculate all values for you. Finish by entering all the non-operating amounts from the newly adopted budget. You created this powerful tool, so share it with your board. There is an Excel file available for you to download on our website. If you have any trouble finding or downloading the file, please call your LGF analyst. We will be happy to help you. And remember, when you file your budget package with LGF, you can email it to lgf@cot.tn.gov. And remember, no hard copies are required. If we can be of any help, please reach out to your LGF analyst. We are always glad to help. Thank you.